Huat Big Big! Happy New Year! Today I'm here at Kelvin Learns Investing. We just had breakfast and it's 1st January 2024. We're going to find out what Kelvin learned last year in 2023 and what he looks forward to and wants to learn in 2024. Click subscribe to stay updated to more videos on investing. Kelvin, welcome back to the channel. What did you learn last year?
Thanks for inviting me back. I think it has been over 6 months since we last met. A lot has happened since then. The market, or the S&P 500, QQQ has reached all-time high, except for Tesla, which is down 40% from its peak. As to what I've learned this year, it's not to time the market. Even though I tell people not to time the market, like buy up, buy down, cry a bit more than buy more, I haven't been doing that diligently. Partly because most of my money is stuck in the corporate account, in my company account. So, and I don't keep much money for myself. That's why, like, even though the market went down, I didn't have much money to invest. So I can only look at the market keep going up. I like, oh shit, it's going higher. Is it going to crash? No, it didn't crash. It just kept going up and up. Thankfully, I still did invest quite a bit, but it isn't as optimal as I wanted to. So that's what I learned in 2023.
Thank you for sharing, Kelvin.
Yeah.
And having a corporate account means you are making it ready. Things are growing. You're one step more positive. It's a nice first world problem to have. And it's good to see your channel grow and also eventually your own business grow as well.
Yeah, hopefully. I think it's, even if you don't run a business, if you have a full-time job, don't just try to be lazy at your job. Try to find new opportunities, ask for more jobs from your boss, even though it's counterintuitive. But by asking for more jobs, you'll get more experience, which will lead you to elsewhere. You'll meet more people, you'll gain more experience, and that equals to higher pay in the future.
That's right.
Yeah.
As we think about the future, what does your investing portfolio look like now?
Right now, actually nothing has changed much since the last time we met. It's still like 70% Tesla.
70% Tesla.
I wanted to let it drop to like 20-something%.
Yeah.
But Tesla just went back up. Should I sell? Maybe not. Let's keep it there. Then what else? S&P 500 is about like 15%. Then the rest is spread across like technology companies like Apple, Microsoft, Google. Yeah, all these companies. Yeah.
I'm seeing all US stocks for now.
Yeah.
How about China or Singapore stocks?
For China, I decided not to go in, even though it's like super cheap right now, because it's hard to get visibility on the companies there. I could do the same for US companies, and there's a lot more YouTubers covering it. Versus China, there's only like Chicken, the YouTuber, and the other guy. Yeah, so it's very hard to do research on Tesla. Plus Tesla, the government always likes to interfere. Like I think in December, the government did some sort of crackdown on gaming, and all of a sudden the Tencent dropped like 15%.
Yeah.
You wouldn't see that in US companies. In US companies, the government is sort of aligned with the stock.
Yeah.
Like you see Nancy Pelosi.
Because Congress is buying stocks too in the US.
Yeah, she's a very good stock investor. She bought Nvidia cores before Nvidia shot up by like 400%, 500%. So it's very, very different investing in China versus US. US is the government is pro stocks. They will help the market whenever possible. China is like they heck care the stocks. As for Singapore company, I feel like it's okay. It's cheap now. But the main reason you would invest in the Singapore stocks is because of dividends, many dividend stocks. So like banks, REITs, they are giving like 4 to 6% now. It's good, but 4 to 6%, you can get that in Tesla in a day. Not to say Tesla is good.
You can also lose it in a day as well.
Lose it 10 times in a day. So I think it depends what you want in life. For right now, I want a high growth.
Yeah.
So dividend stocks, not there yet, until maybe when I'm older, when I can't handle the volatility, then I'll just move over. Yeah.
What would you say is your outlook for 2024? There seems to be more people who are positive about 2024.
So the positive part, right? That's very weird, right? When the market was crashing, right? Everyone was negative. Then early 2023 was the best time to be positive. Everyone was still scared.
Yeah.
And now we are at all-time high. Everyone is suddenly positive. So it's like sort of an inverse relationship. Right now, you should be scared. Market is at an all-time high.
Yeah.
But it doesn't mean that it will crash. So the reason it has gone up that much is because the Fed has signaled that they will start cutting rates next year.
3 times.
3 times that's what they're saying. It could be more, it could be less. And the other thing is that inflation has came down by a lot. Right now it's about like 3%, which is quite close to the 2% target that they're aiming for. So that's good news. But if you look further deep inside, this high interest rate thing that has been high for the last, I don't know, one year or so, it will start to create havoc in the economy now. So, for example, people are going to renew their loans
Yeah.
at a higher rate now. Companies are also going to do that at a higher rate now too. So mortgage loans, corporate loans, their debt level is going to go up.
Yeah.
Not that level. The interest rate, they're refinancing at a higher rate now. And at the same time, US citizens, they are spending a lot of money. Probably it's because it's a post-COVID thing where it's just reopened. It's not just like it's over 2 years now, but they are now trying to YOLO, live life like this. So they are
Buy their cyber trucks.
so they are spending a lot of money on like handbags, travels,
Yeah.
all these companies. So there's data that's showing that their savings rate, not their savings, their personal savings that they have accumulated during COVID period, yes, dropped to the near all-time lows already.
Okay.
It's near to like 2008 kind of levels now. So then that's the second thing. The third thing is that unemployment rates haven't been really doing, okay, it's stable, but it's not that good yet. Then when you pair it with the high interest rate, refinancing at the high interest rate, companies are going to let off people soon to cut costs, which means unemployment rate should go up in 2024. So when you add up all these things, like let's say refinancing at a high interest rate, debt levels going up. And also the credit card, the delinquency rate is also going up. So people can't afford to pay back the credit card debt. So when you see all these things, it could point to a recession where people are going to spend less money in 2024.
Okay.
So recession means stock market might not do so well this year. So there are two sides to this. I believe more towards the bullish side because market is always forward looking. So this recession, maybe it might come, but the impact might not be so huge. Plus the Fed may also start to intervene. If it intervene back again, they'll start printing money all over again to again save the economy. So yeah, I'm bullish, but not as bullish as 2023.
Okay.
Yeah, but,
I'm hearing caution in your tone here.
Yeah, so it's cautiously bullish. Yeah.
How will you Huat Big Big in 2024?
Huat Big Big in 2024. So like when people hear about this Huat Big Big, right, they think about, I want to find the next big stock. What's the next big Tesla? What's the next Tesla? Is it BYD? We has been overtaking Tesla. So after investing for these past 2 years, after I stopped looking at Tesla so closely, I took a step back and realized that no matter how much you Huat Big Big from the stock market, you will never Huat Big big as your day job. So let's say if your Tesla, let's say Nvidia can go up by another 10 times more, or like your recent video, Tesla can 6x more, 600% more. The gains that you get from your stocks will never be as big as your day job. Your day job, you can just get a pay raise of like 20-30%, and you just get that sort of permanently, as long as you don't get fired. So you can get that permanently for the rest of your life, and it will just compound when you jump to the next position, get higher experience. So you will just keep going up. Then all these gains, you just put into the stock market, let it grow at a very slow rate of like 10%. It's still fine, right? But the bigger part is still from the day job. So which leads back to the question, how am I going to Huat Big Big? For this year, I'm going to start an options course.
You heard it here.
But some people will call it like, I'm entering the dark side. Kelvin, how could you have promised to deliver free content to us? How are you trying to like charge us money for this? Today I would just say like, it's not a cash grab thing. I don't intend to get rich from this. Maybe I am like partially, but it's not a cash grab thing. I just accept everyone who who wants to learn. It will be like a school semester interview filter kind of thing lah. I would only do it for people who need it. Partially it's because I feel that options is a good skill to learn that you can directly implement it that will give you immediate returns. As compared to investing. Investing will see a lot more, you need a lot more time versus options. You can do it, you can start earning money immediately when you have the knowledge. So I have to emphasize, it's not because I wanted to get rich, it's just because too many people are asking me when I'm going to start teaching.
Okay.
So yeah, I have to give in to the demand.
And there's only one way to find out. Try and see how it goes.
Yes.
What do you hope to learn this year?
Hope to learn. I think there's a few things aside from my YouTube, aside from investing. Those are obviously I'm still learning.
Yeah.
I'm also now learning how to live healthier.
Okay.
I haven't been exercising for the past 5 years. So this year I've just bought my jogging shoes yesterday. I will start
Congrats.
jogging this week. I don't think it's a New Year resolution thing. It's been on my mind for a few weeks now, few months now. So finally I've made some changes to my YouTube schedule. So now I have more time for my exercise. And that's the one thing. The other thing is to eat healthier. So I will try to not eat so much from my hawker stores. I will try to get tingkat food. Yeah. This year is more on focusing on myself, on my well-being.
What I'm hearing is you're looking more at the whole wheel of life, not just rich in wealth, rich in health, rich in relationships, your own personal growth as well.
Yeah, so because like the past 2 years I've been trying so hard to grow this whole YouTube thing.
Yeah.
Now I think it's more or less stabilized. I can start focusing on other things. Yeah.
You've done a great job, Kelvin. You've been a role model to many people.
Okay.
And it also meant more YouTube content creators, not just in investing, but in other categories, are coming up. Learning from not just our successes, but also our mistakes. Because we've made many mistakes ourselves also over the years.
Yes.
Thank you so much, Kelvin, for
thanks for
sharing. And looking forward to Huat Big Big,
Huat Big Big.
not just in wealth, but in health. So you see Kelvin jogging, you know that this is happening already. If you found this video useful, please click the like button. You can subscribe to Kelvin Learns Investing and watch out for what he has to offer in 2024. And click subscribe to stay updated to more videos on investing. Bye-bye.
Bye. I answered that already. Don't time the market.
Don't time the market. Okay.
Good.
Noob. Okay, you're right. Sorry, rusty.